Good evening and a warm welcome to the 16th edition of Mind Mondays, an initiative of the Mind Institute promoted by Hero Enterprise. Over the last 15 years, the Institute has been conducting several initiatives to generate intellectual discussions and build thought leadership on subjects of importance to industry, economy, and to Indians. Before starting today's conversation, let us look at how our journey has been so far.
To another version of Mind Mondays, an edition of Mind Next, which is the new version of the Mind Summit. Martin Luther King once said, that we must accept finite disappointment, but never lose infinite hope. As we complete 6 months of the pandemic in India and the world, we have experienced and accepted several finite disappointments. But beyond the horizon, perhaps infinite hope will return again. Two outstanding guests today to discuss green shoots in India is the worst behind us. We have Onkar Goswami, an erudite economist and the head of India's largest bank, who is also one of the most seasoned bankers in the country. Let me ask you a little bit about your personal background first for each of you. Onkar, you have worn many, many hats, and you and I have known each other going back many decades now. You've been an active economic researcher, corporate board member, a magazine editor, a TV anchor, a columnist, an entrepreneur, and a whole host of other things. And I remember working very, very closely with you in CII and on a number of other occasions. Looking back, how do you believe this diverse experience has helped shape your thinking? Because you are a voice people listen to.
Well, I think if you were to ask me, Sunil, the single most important thing that this diversity of experience, starting with being the editor of Business India, then joining CII, then being on the boards of companies, is that I got a much closer understanding of how corporations actually work compared to many others in my discipline. So as an economist, I was trained for one, and that was that. But because of this experience in Business India, CII, on the boards, I really got to understand how corporations work, how banks work, and that was a great learning for me, and it continues remaining a learning.
Let me ask you one more. You worked with policymakers, both the pre-liberalization and the post-liberalization era. And today we are where we are as a nation. Clearly we moved forward in the last 4 decades significantly, much more in the last 3, and certainly a lot more in the last 2. How has the approach to reforms of governments changed in this period?
So in quick three parts. In the pre-liberalization era, there were outstanding policymakers. I mean, someone like an Abid Hussain or someone like V. Krishnamurthy were just outstanding policymakers. But they were stuck within the framework of a pre-liberalized era. The initial post-liberalized era for the first maybe 15 or 18 years or 20 years had superb policymakers in government. You can talk of Montek, Shankar Acharya, Rakesh Mohan. I mean, really, really good people in government, and a government that listened to them, and they knew how to speak, what to speak, and where to speak, and how to tailor it in the political economy of the nation. They didn't win all the time, but they did very well. Regrettably, I must say that the quality of policy making in government now, particularly over the last 3 or 4 years, is somewhat worse than what I have seen earlier, and probably worse, and not probably, certainly worse than what it should be given the current circumstances, and that's a bit depressing.
Rajneesh, let me come to you.
Yeah.
You had a wonderful 4-decade inning at SBI, starting off as a probationer, I believe in 1980, to chairing the bank for 3 years and building an institution. Truly, the bank is not just a bank, it is an institution. And you've taken it through some really dramatic changes, including restructuring first in your bank and also in the overall system in India. What part of this has given you the most satisfaction? And if I may, what is next up for you?
Right. So I really don't know that what is next up for me. And I will be 63 in January. So there are not many things to do on personal front also. So that is one. And as far as these 3 years are concerned, you spoke about it. So this was really a very challenging time for the economy as well as for the bank as well. But what I have believed, and that is what enabled me and my team to do certain things which we have been able to do, is adherence to the core value system and DNA of the bank. And what I have always believed, and this is what we keep on discussing whenever there is a management meet, a strategy meet, board meet, that for any organization, it's important that their core values should not change. And once you adhere to those principles, then everything else must change.
Right.
And when I took over, and many things we do, I can say only a repackaging or putting it in a different way. So we had a mission, vision and value statement. And what I always felt that that was too long, very easy to, sort of not so easy to comprehend and remember. So first thing after taking over as chairman was that I redrafted it and made it very simple so that everybody down the line can remember. And more than the vision and mission, which is there, but it is the core values which I defined in a very simple manner, which was what we call steps. And it is service, transparency, ethics, politeness and sustainability. And that is where we decided that this will be the framework, and whatever we do, whether it is your internal organization, dealing with employees, dealing with customers, whatever we do, but everything must be aligned to this. And that is where this transparency and clarity about the values, that has enabled me and my management team to put together an action plan, and then it was implemented in a very systematic manner. So it is always good that the people who are viewing from outside, they have been giving positive feedback. So that is a matter of great satisfaction.
Right. So there are reports now that the financialization of India's savings, which in some sense began rapidly in 2016 with demonetization, has gathered pace during the pandemic. Do you see actual evidence of this?
Yeah, very much there. And whether we look at the bank savings or we look at even at the capital markets, so definitely there is a shift, and the numbers speak for themselves about the deposits in the bank. They have seen fairly good growth, and even in this period of pandemic, what I'm finding that the role of the banks and financial institutions in mobilizing the financial savings, it has increased because of 2-3 things. One was, of course, it was a result of demonetization for sure. Second is the outreach which has been made by the banks. And today, if I compare, say, 5 years ago, the number of people who are financially excluded, that has come down. Third is the technology enablement. So these 3 things have now, I would say that the financial savings in the system, so these 3 have been the big push factors.
If I may,
green shoots to you, Onkar. I'm going to add something, and then you answer both together if you don't mind.
Okay, go ahead. Go ahead.
So the finance minister has spoken of green shoots. The chief economic advisor has spoken of a V-shaped recovery, and that what they've quoted is vehicle sales are up, railway freight is at 95%. So they've given a number of data to back this up. Do you see the green shoots getting better and taller in the future? What do you see happening first in the immediate?
So let me before I get to the green shoots issue, where I have a very strong point of view.
Yes.
Let me add one thing about the financialization. Is that what COVID has done is actually brought about a dramatic increase in the deposits that are going into the banking system. People and corporations have kept aside all manner of other expenditure. So whatever is the spare cash they have put it into the banking system one way or the other. And households, because they're afraid of what's going to happen in the future, has put in a huge amount. So if you look at the latest quarterly data of the RBI, you will see that the deposit rate has gone up dramatically. Unfortunately, the ability to use this deposit, which is a liability to the bank, to create assets has not gone up in the same way as you would expect. So therefore, the deposit to credit ratio has gone up, which is at one level good for the depositor, but it's a little bit difficult for the banking system to deal with.
Yes,
now, as far as
the banks are getting more money than they're giving,
than they need, actually. Yeah. So and are paying a cost for that. But that aside, if you're talking of green shoots, my basic point on this is the following. It is definitional, and I use the word definitional, that when you have 1 month of 100% lockdown, which is April 2020, then by definition, May 2020 has to be better than April 2020, June 2020 has to be better than April 2020. So you shut a country down fully for 1 month, you are going to see some kind of a V. But is that V a green shoot? No, I don't think so. Because I'll come to that later for you. If you were to look at what I would say a dozen well-known, respected economists, and I'm perhaps the not disrespected, but I'm perhaps one of the, relatively younger guys in that lot, we all believe that we are looking this year at 2020-21 to a minimum contraction of 11%. My estimate is 12.9%, but other economists have estimates going up to 18 to 20% contraction. Now, to me, this kind of contraction and green shoots don't make sense. I understand why the Ministry of Finance wants to talk about green shoots, because that's what they have to do. It comes with the territory. I don't blame them for it. But for me to accept that these are truly green shoots, I need to see more.
Okay. Rajesh, India has accumulated huge foreign exchange reserves right now. Interestingly, in this period, the reserves have continued to climb up quite significantly. Do you think it's time to deploy them imaginatively now? Because we do know overall there is a serious shortage right now. From the government's point of view, the resources available against the deployment that the industry, the economy, and the people are asking for has become very difficult. We've had some fiscal support, we've had some monetary support come into the system, but there is a continuing demand for more. Where do you think this money can come from?
So there is no doubt that India is very comfortably placed as far as the forex reserves are concerned. And the reason for growth are also obvious that as far as the capital flows are concerned, they have been good. And as far as your current account is concerned, so because of the prices of crude oil, they have come down, and that is where you are having this situation. Now, how to imaginatively use it? That is the question. So one experiment which was done in the past was when IFCL UK was set up. And Reserve Bank of India worked out an arrangement where the IFCL UK was given the dollar funding, and the arrangement is that those dollars don't get converted into rupee. And if you are importing in the country, so the arrangement was that you can pay into dollar out of these funds, so that you can ensure that the dollar flow, and in current situation where there is enough rupee liquidity available, what we were discussing a couple of minutes ago, that the system is flush with liquidity.
Yes.
So it won't make sense that the dollars gets converted into rupee and we had more liquidity currently. So that is not required. But IFCL UK, unfortunately, that experiment has not been very successful. And the money which Reserve Bank of India is keeping overseas, it does not give them a great amount of earnings, because all of us know that now the rate of interest is either zero or in negative territory. So that way it is not giving any good yield. But ultimately it is a combination of that how do we look at the interest rates differential, your policy about the exchange rate management and the liquidity in the country. So it is always a sort of a difficult task, but as I said that had the experiment around IFCL UK been more successful, then we could have built on that innovation.
Do you think we should try that experiment again with some tweaks?
I don't think so. I'll tell you why.
Okay.
I'll tell you why. As Chairman SBI said quite categorically, there is no dearth of liquidity in the system right now. In order to pump money in, you can pump money in by using foreign exchange reserve and converting it into rupees, but we don't need it. We have no dearth of liquidity in the system at this point to pump money in. But the issue of pumping money in is this, that whichever way you pump the money in, whichever way you monetize it, whether you monetize it by creating additional money in the system, or you monetize it by T-bills, whichever way, treasury bills, whichever way you do it, you will have a higher public debt exposure for the fisc. The Reserve Bank is only an intermediary. The Reserve Bank will pass that on to the fisc. I don't think the fisc can afford it. It is in a pretty shattered situation, which is exactly why. I mean, there's one thing which I would not blame Mrs. Nirmala Sitharaman at all, that in that big package that she announced over 5 days, the fiscal outlay was only 1% of the 10%, right?
Yeah, that's 1%.
Because that's about all that she could afford. So thinking of monetizing at this point, while it is good in principle, it does not need any foreign exchange transactions for it, and B, I don't think we can afford it at this point of time.
Let's talk a little bit about what's going on in the states. Some of our more industrially advanced states are the ones actually who suffered the most right now. If you look at Andhra, Tamil Nadu, Maharashtra, these are states which have a significant role in India's GDP, both on the services and on the manufacturing side. Do you think it's time for a strategy to de-risk India's economic layout as well, geographically? Is it possible for us to build more capability in other parts of India?
Why do people go to a state and not another one? For instance, why do people go to, Sunil, why do they go not just to Tamil Nadu, but in Tamil Nadu over 3 districts? Why do they go there, right? Why do they go to 2 districts in Telangana? Why do they go to 1 district in Andhra Pradesh? That is simply because those districts and those states, Maharashtra, parts of Maharashtra, Gujarat, they have the infrastructure and they also have a whole bunch of similar industries around, just as where you are in Hero. I mean, you are where you are, and that creates its own business. In due course, yes, you could decentralize. But for that, the kind of infrastructure and the kind of logistics and the kind of movement of personnel and the kind of educational facilities that you have to give to the families of those personnel will have to be planned for. It can't happen in a hurry. I agree with you in principle, but it's not as easy as baking a cake.
So,
yeah,
my view is also more or less identical, that there have been several attempts in the past where we have said that you put this industry in the backward district, or say even like UP is a prime example of Western UP and Eastern UP. The divide is so clear, and all the economic activity seems to be happening in Noida and Greater Noida and around. And we had this even this theory that put large public sector undertakings in some of the backward districts in Eastern UP. But that experiment has failed in the sense that those districts remain where they are, and the progress is all happening in NCR. So I think this is the overall, what we must also recognize, that it is the DNA or the sort of like, you can't ignore the DNA of the people also. Some by nature are more entrepreneurial, and that is where the industry flourishes. Some of the centers like say Pune is a prime example of where, because of the superior engineering education and lot of industries, and it became a auto hub. Same can be said of NCR. So there are many elements which go into, and the human angle and the human element, where would you like to live? So today, even if somebody tells people that very comfortable residential colony we will give, and you yourself can vouch for it, but not many people would like to go. Today in UP, I am telling you, people don't like to live in adjoining districts of Meerut and Moradabad. I come from Meerut. Everybody would like to live in NCR. And I am told one more interesting thing, that a girl from South Delhi doesn't want to marry in Chandni Chowk. So how do you ignore that? That is what I have heard.
So it's an interesting point both of you are making. So all the more reason that the cluster effect, what the world has been talking about for many, many decades, has demonstrated its advantages. The US did it by design. In India, we got some of them by default. Ludhiana became a cluster for hosiery, bicycles. So we have a bunch of clusters in Surat and a lot of other places. One of the ideas, if you remember, when the Delhi-Mumbai Industrial Corridor was being designed, was exactly this: to create clusters by design around specific activities, and then create a holistic system, also education, also research in that very area. But anyhow, I think the point is clear, that by itself is not going to work, but if one makes a sustained effort, which is holistic, it is certainly possible. Let me come back to the banks now. The RBI has announced a one-time restructuring for banks to address the stressed loans thanks to COVID. Now there is talk that this may be extended. There is talk that Mr. Kamath and the committee has a whole set of other recommendations coming in. What do you believe this is likely to do to the banks, their balance sheet? First, what do you think is the likely announcements we would hear in the coming days, and the likely impact of that on the banks and on the economy?
So about the restructuring, one is that this is first time that the restructuring of personal loans also has been allowed, what we call retail loans. Otherwise, whenever we talk about restructuring, it is restructuring of the corporate loans and the SME loans. And for the corporates, from my own experience and looking at the books, doesn't seem that there is too much demand for restructuring of corporate loans. The reason could be that in last 3 years, lot of, because of the IBC process or the February 12 and later on, which became 7 June framework, lot of accounts have already been taken care of. And here we are talking about a limited, you can say limited window, where Reserve Bank has said that COVID-19 impacted only. So that is the first starting point. There is a window and a special window, and what does it do? 2, 3 things. One is that if it is a COVID-19 situation, in the earlier framework for the sustainable debt, I'm talking first about the corporate structuring. So for the sustainable debt, even for sustainable debt to be classified as standard and not become an NPA, you needed a change of the promoter. Minimum 26% somebody should come in. This framework, it allows the existing promoter, and rightfully so, because COVID-19 is not their creation. So that is one major relief. Second is, of course, that the provision, instead of 15, you make 10% provision. What I have found that corporates themselves, are reluctant or hesitant to have this type of restructure. But certain sectors, I believe it would be inevitable, and the sectors are definitely, I would consider airports, there could be shopping malls, hotels, uh, entertainment industry means cinema halls. So these are some of the sectors where they are not dependent too much on the working capital, they are dependent on the term loans, and elongation of the term loan payments or refacement in bankers' terminology, it may be required. And as far as the retail segment is concerned, it may differ from bank to bank, and depending upon what is the profile of their customers. But wherever there is a situation where the bank has a profile like ours, where they are government servants, where the loss of employment has not been as much as in the self-employed professional sector. So bank to bank, that will defend, and we are yet to see any major requests coming in for restructuring, but these are early days. And SME, in any case, we always had a special window as on 1st January, which has been extended up to 31st March. So in the whole scheme of things, the segment where I am looking that the requirement for restructuring would come is definitely small and medium enterprises, and not as much for retail or corporates. But retail, I would qualify the statement, it would differ from bank to bank.
So let me ask you the same question, Omkar, with a slight add-on to this. While you said the economy is destroyed, and by the way, of course, it's very severely impacted. It is also a fact that there are sectors in the economy which have not turned around, they've turned around quite smartly. If you look at fertilizer, you look at tractors, you look at two-wheelers, you look at bicycles, you look at sugar industry. I mean, you can rate when cement has started doing better, steel has started doing better. So with this in mind, and the almost complete destruction of jobs in the very small enterprises, when you put these three pieces of the puzzle together, including the one I asked Mr. Rajneesh Kumar earlier, what is your view on this? That selective support clearly does seem to demand merit right now.
Absolutely, no, absolutely. And to my mind, the biggest, I agree with Mr. Rajneesh Kumar and with you that the biggest support that is necessary economically as well as humanely is for the medium and small enterprises, the MSME sector as they call it, as it is called. But it is extremely difficult to do. It is one thing to look at the profit and loss account and balance sheet of a large firm and then figure out what I need to do so as to not lose too much on the net present value of the restructuring. It is quite a different thing to deal with a 10 crore company, turnover of 10 crores, which is on the high side, very much on the high side, okay? A 10 crore company, and figure out how I can help them with the working capital, which is completely got eroded. How can I help them with their building up an order book? It's a very, very difficult thing to do. And this is where it becomes even more difficult, Sunil, because in most cases, at the level of a branch officer, today the sense of a branch officer being a banker has gone away. A branch officer only looks at whether your things are all properly filled in. He does not go up and say, ki, "Acha, chalo, tumhare liye main kuch karta hu." Okay, it may require A, B, and C to be done. Magar, I have dealt with you, I have dealt with your family, I know you're a solid guy, I'm going to help you. That kind of banking that we had has over time got, for one reason or the other, which I won't get into, got destroyed. And that makes it very difficult to turn around an MSME and doing it super fast. It's not about what the government is giving to do so, but it's about decision making. So I believe that is a sector which is going to go through a lot of difficulty. The other is going to be frankly speaking, as Mr. Kumar said, the entire construction and infrastructure sector, it's going to be difficult, not only because it's a tough sector to be in any way, and it has high leverage to begin with, but also because the labor is still not coming back. I mean, I'll give you one example. There are 3 cement mills that I know, which are doing clinker plants. Okay, they want to get the plant up and going. They're not getting labor.
So is that an opportunity? I'm going to ask both of you.
Can I make a small observation?
Please do. Go ahead. Please do.
Mr. Omkar Goswami said. As I said, that the SME sector, that is where the restructuring is required. That is also true that the decision-making process today is very different. But one big enablement today is the technology. And for some sort of where it is, say, loans up to 1 crore, turnover is 5 crore, that pretty much covers 80 to 85% of MSME. There it is possible to have a parameter-based, standardized approach.
Without creating distinction.
Without creating distinction.
Based on, I guess, on value scale, I guess.
Yeah. Exactly. And for retail, it is much easier. Say a housing loan. So we are putting entire system on website where anybody would be able to come and check that how much restructuring or whether it is possible or not possible, eligible, not eligible. So smaller loans now today, they have become commoditized. And technology enablement has done that. And bigger loans, in any case, you need lot of judgment and individual involvement. So that is where some differentiation is very much there. And most of the banks today, they have moved to what we call centralized processing. So that is now the major difference today.
Right. Let me ask you one more thing, and this is starting with you, Mr. Rajesh Kumar, but also for Omkar. Now, considering that the entire globe is going through a difficult period in many, many ways, and some countries are more stressed than others, some economies are turning around, some are not, some are still declining. Do you think it could be a smart idea for India at this moment to set up a sovereign wealth fund to invest overseas, to acquire assets which are in India's interest, and also to set up one in India to deploy some of the liquidity that we do have into significantly larger productive assets than we are otherwise able to do?
Sovereign wealth fund, I am not so sure about that India going out and acquiring assets overseas. Because today the time is that we take care of our domestic economy and its productivity and the competitive.
I'm talking about both, which are in India's interest. Even outside, there are many things you need today, and you're going to continue to need in the future as well.
So that it would best be left to the private sector, in my view. The governments are not good in running business.
So again, I'm sorry, I have to interrupt here. When I'm suggesting a sovereign wealth fund, I'm not suggesting one run by government, by the way. If you see the sovereign wealth funds run worldwide, they're actually run as independent, near private enterprises. If you look at GIC, look at Temasek, you look at CPPIB, you look at the whole bunch of them, the pension funds, the sovereign wealth funds, all of them are run as well or in the same manner as any private investment enterprise would be.
So because they are not having enough avenues in their own country, a country like Singapore, which has so much surplus money.
Yes.
India, we have we have to be capital guzzler. We need more and more and more money. So what India today needs, if you ask me, and whenever people talk about that the credit growth is not happening, but I have been saying that we lack the equity in the country. Debt also can be given when the equity is there. And over a period of time, the equity with the private entrepreneurs, it has come down or it has got concentrated. So a country like India, which has 130 crore people, we need a very large number of medium enterprises. And we need large scale, no doubt about it, because by nature, the larger scale corporations, they bring in lot of productivity gain because of the economics of scale. At the same time, a country like India, we need thousands and thousands of entrepreneurs who are in, I would say, a mid-corporate space. Unfortunately, after the last financial crisis, 2008 onwards, what I have observed in the from State Bank only, I have been observing that that mid segment, it has suffered badly.
Actually, I want to add to what you're saying. I completely agree with you, because one thing, Sunil, we forget that certainly the three of us don't, but generally we forget. We think that the first quarter of fiscal 2021, of course, is a disaster, minus 23.6%, and all of that. But what we forget is that for 8 successive quarters, we have had declining GDP growth. 8 successive quarters. And we forget that the biggest reason for that decline in GDP growth is a steady decline in gross fixed capital formation as a percentage of GDP. I mean, you go back...
Just longer than 8 quarters, Onkar.
Yeah. 6. Yeah. So if you go back to 2011, we were looking at something like 36% as gross fixed capital formation to GDP. Today, forget about this quarter, which is only 23%. But we have been the appetite to invest has gone down. And the reason I'm saying this is in the context of a steady decline in the appetite to invest. I'm not sure at this point whether a sovereign fund, whether to invest in India or to invest abroad, is a particularly good idea. It would be a good idea if we again got our engines running. And if we got our engines running, we would have enough surplus to put in for a later point of time.
So let me ask a different question then. Do you both believe it's time now in India for a bad bank? Because the banking system has been burdened now for a while. First with the slowing economy, then hit with the COVID, the global slowdown. So we had multiple knocks take place on our entire economic system, and therefore the backstop is, of course, the banking system. Now, there's been this talk for many years. We've never been able to make up our minds whether it's a good idea for us or not. And would cleaner balance sheets of most banks allow them to be more agile than they are right now? And this I'm saying despite what Mr. Rajneesh Kumar said, that there is not much demand, but that's a temporary current slowdown. I'm talking now over the coming years and decades. Would this make sense for us to consider a bad bank?
So this is the best time to go for a bad bank. And why? Not for all the reasons what Sunilji you mentioned. The first simple reason is that today, whatever bad loans are there in the bank's books, they all have been provided to the extent of more than 80%.
Right.
So net book value of these bad loans is at a historically low level. The question around the bad bank has always been that who will fund it or from where the capital would come in. So the kind of provision coverage ratio which banks have built up in the last 3 years. So that is why it is the best time to go for a bad bank, because you will be easily able to take these bad loans out of the books and the capital requirement for doing so would be minimal. And I am a big advocate. 3 years ago, I had a different viewpoint because the question was that who will fund it. But today, we have taken care of all the legacy accounts. And what it will do is that if the consolidation happens and the right type of people are there to manage that bad loan book, the decision making will be faster. But even if we are toying with the idea and it is the best time, but still we will have to put our NCLT system in order. Because
I want to add something to what you're saying. I want to add something to what you're saying.
Sure.
I'll be a bit of a dog in the manger in this one. Okay. But this is something I've studied very deeply over last 5-7 years. and indeed written a piece in an edited volume on this. If you were to look at the history of the success of bad banks or asset reconstruction corporations in the world, okay, 95% of the times, the assets that were the core of the bad bank assets were actually housing loans, okay, individual housing loans, not large industrial loans. Individual housing loans are easy to package, they are easy to mortgage out, they are easy to evaluate, and they are easy to buy and easy to sell. If you everywhere, all the successful bad banks, 80% of the assets that they picked up, if not more, were housing loans. Okay. In our case, we have no problem in India with housing loans. No one defaults on housing loans in India. Our biggest problem are with corporate loans. So while Mr. Rajneesh Kumar is correct that we have provided and we can sell the thing without taking a hit, the seller will not have to take a hit. The fact is, getting opening out a large complex corporate loan, because buyers may not want the whole lot. Some will want parts of it. That's not easy to do. And therefore, the tenor of a bad bank is going to be longer and it will be difficult to restructure. So just remember this, that the majority of the assets that bad banks will have in India will be corporate loans, which are very different from an aggregation of housing loans.
No, correct, Onkar. But if you again take a step back and look at the bad banks overseas which have worked, take out for a minute the housing loans. The rest of it also has worked. Many of them turned around.
90%. 90% of the value, if not more, of the assets of every successful bad bank in the world.
I don't think that's a good reason to not do it, by the way.
I'm not saying you shouldn't do it.
Yeah.
All I'm telling you is I'm putting a word of caution that 90% or more of the assets of every successful bad bank in the world has been divisible housing loans and not large indivisible corporate loans.
So it's clear that it needs a certain expertise to make those work. There's no doubt about that.
So I'm just putting that word of caution. It's not an automatic thing.
Yeah. So, Rajneeshji, Onkar said earlier we should not consider any more stimulus. We've had many other economists make a case for essentially putting cash in people's hands, especially individuals and small industry. Raghuram Rajan, I think, was the latest one who made a pitch, said it must be done, it should be done. We have enough examples of looking at UK and Canada and Japan. A whole host of countries have done it. Now, considering our current state of the economy, the fiscal deficit, as also the government's own spending plan, what is your view? Is that a possibility? Would that be helpful? Would that be more helpful than taking money away from other programs right now?
If we look at that, what government has done, of course, like most of the measures have been around the liquidity support and monetary measures.
Correct.
As far as the fiscal is concerned, the money has gone to what we call the people at the bottom of the pyramid.
Yep.
And for any government, I think that would be the natural thing to do. So if any fiscal stimulus is required, I still believe if government has headroom, which all of us know is very tight, and whatever you do, nothing comes free of cost. That also, what would be the costs? That is also to be very carefully evaluated. But the two ways where the fiscal stimulus, within whatever the headroom is available to the government, it will definitely be aimed at direct benefit transfers to the most underprivileged. Now, whether are they spending that money? So that is not happening. That is what Mr. Goswami also mentioned. That is what we are seeing also. That our balances in savings bank account have built up because of the whatever has been transferred as a result of DBT. Not everything has gone out. Even if the amount was small, 500 rupees for women children accounts, 3 installments of 2000 rupees each for farmers,
Hmm.
but the savings bank account builder of balances is an indication that currently people are, because of some sort of a fear psychosis, so they are not going out and spending.
The interesting
In such a scenario,
yeah.
if we are looking at increasing the consumption demand, how will we encourage the people to spend? That is the question. So if we can find a way where we encourage people not to keep their money with the State Bank of India,
Yeah.
but go and spend, so that itself will do the trick. Take away 2 lakh crore from me.
Yeah.
Bilkul,
That is right.
100% right. Sunil, I have a simple point which I think we need to think about. Is, as Mr. Kumar said, people spend when they have no fear. When there is fear, people save. It is very straightforward, right? Now, from the point of, that's the first point I want to make. My second point is from where? The calculations that I have done, and it's going to be published soon, even without any additional spending over and above what Mrs. Sitaraman has had announced, the revenue deficit in the central budget is going to go up from 2.7% of GDP to 7% this year, revenue deficit. The fiscal deficit will go up from 3.5% to 8.4% of GDP. And the primary deficit, that is the deficit minus the interest burden, is going to go up from 0.4% to 4.9%. The fisc is completely, battered, right? As we were discussing before we started, the GST revenues are going to be dropping by something like 17% to 19%, which is about 1 to 1.2% of GDP. So where will this money come from? And the second and the third point, so first is, my first point was people don't spend when they're worried. Second is, where is this money going to come from? And my third point is, how do you ensure that the money actually goes to the people that you wish it to go and doesn't get stuck? I mean, one has to figure out the way in which money flows from the Ministry of Finance to the expenditure and then goes out to the state capitals, then to the districts, and then goes out to the people. The way in which it goes is not a very efficient way.
Yeah, but that's certainly today.
Happening.
Yeah, Onkar, today that is certainly a lot more efficient than it ever has been due to connectivity, technology, and the digital payment system, and everybody having, most people having both electronic records and bank accounts.
Yeah. So
I just want
one small comment.
Yes.
If at all government has to spend.
No, before you answer this, I want to push back to both of you gentlemen and tell you that if you see where demand has actually increased, where production has increased in industry, it is literally and only those where the government actually spent the money.
Exactly.
Tractor industry, bicycle industry, motorcycle industry, sugar industry, cement industry, literally all the areas in which the money was spent are the ones showing demand. And I think this is what industry and economy is asking for, create a virtuous growth cycle, because otherwise we can keep cribbing and this will keep declining. We don't have an answer. So from both of you, I'm looking for one positive note before we wind this up. What is the message that you have? What is the ray of hope? What is the likely change that we will see, which will make the situation better in coming months ahead of us?
To me, it's infrastructure, everything related to infrastructure. If we stopped everything else and ensured that a sizable amount of money from the exchequer went into infrastructure and actually was used, and there I have a great deal of hope that if Mr. Nitin Gadkari gets extra money, he's going to use it, okay? If infrastructure amounts can be significantly increased, so too will cement, so too will steel, so too will incomes of people who are working there, so too will that part of rural India through which infrastructure is going through. And to me, if I have to focus now I would focus left, right, and center on infrastructure because it is a great employment multiplier, it is a great income multiplier, and it will actually have long-term positive things for the economy.
Mr. Rajneesh Kumar?
I think absolutely what Mr. Goswami says, that if government has to spend money, it should be all on infrastructure, because consumption demand, boosting it otherwise. You can give direct benefit transfer, as I was explaining that, but it will go to the banks and it will swell the deposits of the bank. So unless this COVID fear goes from the mind of the people will not spend and people will not borrow also. This is a very different trend I am seeing, that people are hesitant to borrow, whether they are individuals or corporate. Nobody wants to increase their liability, and because of the fear psychosis. So that will take time. And infrastructure is something, because as Mr. Goswami was explaining, that it is a huge multiplier effect. And we are infrastructure deficient. And because we are infrastructure deficient, it impacts the productivity of the economy as a whole. Today, an exporter, they can't commit that they will be able to deliver in time. Your power, it is so costly. It makes you uncompetitive. So I think the productivity of the economy as a whole can get a big boost. And we have a 110 trillion rupees 5-year pipeline. So how to fund it? What will be the extent of private sector participation and the governments, whether central or state governments, a very clear spending plan on the infrastructure, and all these disputes which happens between the concession granting authority and the concessioners, they have to go, because everything is in arbitration, reconciliation. 60-70 of EPC companies have disappeared in this country in 5 years because of the disputes with the government departments. We have to get all our contracts and concession agreements right. Can't kill the industry like this. So
also, Sunil, I just want to say quickly one thing, okay? Because I'm very familiar with this drive. I've done it maybe 80 times or 90 times, okay? I go up to a place in Kumaon, just below Mukteshwar, called Sitla. And I drive up myself. So forget about the hill part, which is from after Kathuram. But between Delhi and Haldwani is about 270 odd kilometers from where I stay. That's right. Now, when I first went, well before NHAI, and I drove in my Ambassador WBD 8100, it took 8 hours to get to Haldwani.
Yeah.
About 7 hours to get to Haldwani. Today, with everything, it still takes 7 hours to get to Haldwani. So clearly, even though we've done a lot of work, the infrastructure is not up to it. Why should 270 kilometers take 7 hours?
Right. So, one of the points both of you made on entrepreneurship, that there is a need for us, especially in the small and mid-size, to have thousands and thousands of entrepreneurs. We are actually attempting to do that, by the way. In the BML Munjal University that we set up in my father's name, we are veering towards turning our big focus on innovation and entrepreneurship as being the North Star for everything, while the university has many schools. But this is one of the things we are attempting to populate the country with potential future leaders, and they can pick their fields once they go out. But you're right that this is one of the things that will allow India to get more innovative, more productive, more efficient, more economically viable, etc. But before I let you both go, Mr. Rajneesh Kumar, you are not just one of the senior most bankers we've had in a long time in India. You're also one of the most respected bankers. You've seen State Bank through an amazing series of twists and turns, as also the overall banking industry. What is the message that you would like to give to young people who are today entering banks and becoming new bankers, probationers, like you were maybe in 1980?
It's a very different world. In 40 years, the banking has changed completely. And when I joined the bank, everything was manual. And when we speak today, everything is technology, digital, and still a lot more to be done. And then again, it comes down to the same thing, that in banking there are certain principles about the honesty, integrity, transparency. So that is something which a banker, it should be very dear, in the sense that whatever trouble we have seen in the banking system, and including many private banks, they all have come because those principles were followed. Otherwise, today, the banking is more exciting than definitely what it was in 1980, let me tell you. At that time, bookkeeping was a drudgery, all manual, customer service was also in bad shape. Today, it is an explosion in the banking services in this country when in last 40 years. Today, just to give you an idea, State Bank, we serve 48 crores customers. And so much innovation has happened in all the products, services. So definitely it is more exciting today than what it was 40 years ago. And my advice to the banker is that in the banks, when I joined the bank, I was taught that first and the foremost thing is you can even be indisciplined but not be dishonest.
Right. Good. That's good. A good learning. So, Onkar Goswami, Rajneesh Kumar, thank you very much. Both of you have been very articulate, very open, and wonderful conversation on what's going on in the economy, whether we have any green shoots at this moment or not, where the economy is going to go in the short-term future, as also our future that is tied into things like infrastructure and overall development. And we did not talk about the human index development because that's another important area, but I guess we can keep another session for that conversation. Thank you both very much.
Thank you, Sunil.
Thank you. And I've been asked by our team to show a small film on a book that I've written called Making of Hero. This is the story of my father and his brothers and how they came in as refugees from what became Pakistan and came and from scratch started this enterprise, which is what it is today.
If there is a godlike person, I have to say this on record, and you know this, Sunil, if there is a godlike person that I have touched his feet every time I met him, it was your father.
I know he had a lot of regard for you, Onkar, as you know, it is, I think, it was a mutual relationship. So thank you very much. Thank you both, and thank you to the audience. Leave you with this short clip on the book. Thank you.
From the bylanes of Kamalia and the rugged landscapes of Quetta, they escaped to India with little more than the shirts on their backs. In the partition-ravaged cities of Amritsar, Agra and Delhi, 4 of the 6 Munjal brothers, Dayanand, Satyanand, Brij Mohanlal and Om Prakash, built their business part by part. Armed with nothing but self-belief, the brothers began with trading and then manufacturing bicycle parts, which soon evolved into the production of bicycles. For post-independence India, the Hero bicycle gave wings to the aspirations of the common man. By 1986, 30 years after its inception, Hero Cycles became the largest bicycle maker in the world. In the next 15 years, the motorcycle venture, Hero Honda, repeated the feat, and both pole positions are held firmly even today. Hero's story is about humble beginnings, the refugee entrepreneurial spirit, hard work and zeal. It looks at how four brothers with little formal education created a world-class enterprise. This is the incredible tale of a principle-driven organization that created exceptional value for a society that desperately needed transportation. How did four brothers with distinct personalities work like a cohesive unit and build a manufacturing behemoth? How did they synchronize their strengths? How did they resolve their differences, if any? The story goes deep inside the family spirit, the parivar, that brought together employees, customers, channel partners, suppliers and local communities to create success, welfare and well-being for millions. This is the making of Hero. Four brothers, two wheels, and a revolution that shaped India.
Thank you.
तो ये बुक तो जरूर पढ़ना है मेरे को.
मैंने आपको भेजा हुआ वैसे, but I'll repeat it.
अच्छा, मुझे off in each one of those assemblies.
Yep.
And the most interesting thing was, come evening,
Yep.
the entire production of cycles produced that day was shipped out.
Shipped out every